Hey everyone, it's Josh from Blockchain DXB, and guys, today is the 10th of June 2026, and according to me, Satoshi, today is a big day because today the CPI data or the inflation data will be out, and it's going to be really interesting to see how the prices of Bitcoin and cryptocurrencies will be reacting to this particular data. Now in today's episode, guys, we'll definitely go ahead and delve into finer details regarding CPI data, how CPI data or inflation is calculated, and more importantly, Satoshi will also go ahead and discuss what kind of an impact does inflation have on the price of Bitcoin and cryptocurrencies. And I thought Satoshi we'll also go ahead and discuss what this inflation data means for the US economy. And more importantly, Satoshi, look, in November there's going to be midterm elections as well as Senate, so we'll very briefly discuss how does inflation data impact the sentiment of voters. Now I wanted to ask you, Satoshi, when you talk about CPI and inflation data, how much of an impact do you think this particular data has, particularly for investors who are focusing on AI industries?
Well, George, that's a crucial point. The CPI data can have a significant indirect impact. When inflation is high, it pressures the Federal Reserve to potentially raise interest rates. Higher rates can make borrowing more expensive, which might slow down investments in growth-oriented sectors like AI. Investors might shift their focus to safer assets, potentially affecting the funding and valuation of AI companies. Also, persistent inflation could lead to increased operational costs for these firms. So, while the data doesn't directly measure AI, the economic aftermath can definitely shape the outlook.
We'll definitely go ahead and take a deep dive into this, and I'm so glad, Satoshi, you did actually talk about the impact of this on the FOMC announcement. And later on in this month, guys, Federal Reserve Board has a new chair. They will be making a decision regarding the interest rate based on CPI data, as well as plethora of other information. Now, the second news, Satoshi, we're going to be talking about is connected to NFTs, and people are definitely aware about the whole NFT hype, and there was a massive company called as Yuga Labs. Now, this news that we're going to be talking about is connected to Yuga Labs. Now, here's the thing, Satoshi, they kind of avoided an exploit, and they essentially saved a lot of the NFTs. So in today's episode, we'll definitely go ahead and tell our listeners more information regarding this. Now, the third news, Satoshi, we're going to be talking about is a massive news, and this is connected to on-chain credit. And there is a company called as Morpho. They have raised a staggering $175 million, and there are a lot of companies involved in this. And according to me, look, Satoshi, getting all of this data on-chain is definitely a massive deal. So in today's episode, we'll definitely go ahead and tell our listeners more information regarding this. Now, the final news for today, Satoshi, is all the way from the United Kingdom, and the UK regulator, that is Financial Conduct Authority, guys, they're allowing 10% of crypto portfolios. So in today's episode, we'll go ahead and give our listeners final details regarding this. Now, what is really interesting to know, Satoshi, regarding this news is the only information is available via CoinDesk. Unfortunately, apart from the CoinDesk article, there's no information available by the Financial Conduct Authority. But nonetheless, in today's episode, we'll definitely go ahead and explain this news to our listeners. So look, Satoshi, we have quite a lot of interesting things to cover in today's episode. And like we do in every Blockchain DXB podcast, we will be looking at two news from Dubai, UAE and the Middle East. Now, the first news, Satoshi, is a massive news, and this is essentially a report that is published by IBM along with Dubai Future Foundation. And check this out, Satoshi. The report actually states that the United Arab Emirates is ahead of its peers in AI governance adoption. So we'll definitely go ahead and tell our listeners more information regarding this. And what I'd really urge our listeners to do is go ahead and download the report, and they should definitely go ahead and read through the report themselves as well. Now, the final news, Satoshi, is connected to Sharia approval. Now, do you want to tell our listeners what is the final news that we're going to be talking about in today's episode?
That is absolutely correct, George. We have quite a lot of interesting things to cover in today's episode. And the first news you talked about regarding Dubai Future Foundation and IBM, it is definitely a massive report. Like you said, listeners should definitely check that out. Now, regarding the second news, George, it is regarding Sharia approval for Islafi Technologies' tokenized Murabaha platform.
We'll definitely go ahead and take a deep dive into this. So it looks like, Satoshi, we have quite a lot of interesting things to cover in today's episode. But before we go ahead and do that, a quick word from our sponsors. Hey everyone, this episode is powered by a new sponsor, that is Amana. And they are the region's first and fastest growing regulated all-in-one trading and investing app. So look, guys, whether you're looking into investing in US stocks like Apple or Tesla, or mega giants like ADNOC or Salik, Amana puts the financial markets on your fingertips. It includes gold, foreign exchange, ETFs, futures, commodities, and guess what, guys? They have over 375 cryptocurrencies, and this makes them the biggest crypto selection in the region. Now, for the Blockchain DXB listeners, guys, if you want to go and build long-term wealth without thinking about it every day, explore Amana's pre-built auto investment plans, and all you have to do is set your monthly budget, Choose your preferred asset category and let the Mana automate the investing for you. Zero fees, zero lockups, 100% customizable. And here's the thing guys, funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits and even crypto wallets. No friction and no hassles. And the best part is guys, let's say if you need support, you would absolutely love Mana for this, because they offer 24/6 human customer service as well as a personalized sales support, real people, real help, and the customer support is in English as well as in Arabic. And for the Blockchain DXB listener and community guys, I do have something really exclusive for you. What you can do is register with Mana using the code Blockchain DXB, or you can also use the link that is in the show notes below. And here's the best part guys, once you register, fund your account with a minimum of $100 and at least go ahead and make one trade, and then you'll receive a $100 trading bonus credit to your account the following month. But look guys, it's real important to note, the bonus is non-withdrawable. It is there to help you trade and learn. So look guys, if you're looking for a transparent, powerful and easy to use app, that's a Mana for you. So what are you waiting for guys? Download the app now, or you can also visit the website that is amana.app, and don't forget to use the code BlockchainDXB. And Mana guys is all markets one app. Next guys, I'm happy to announce that Blockchain DXB is the official media partner with one of the OGs in the cryptocurrency and blockchain event space, and that is Blockchain Futuristic Conference taking place in Florida this year, as well as ETH Women taking place simultaneously. And trust me guys, this is an event that you don't want to miss, isn't it? Because for the very first time, North America's most immersive Web3 event is heading to the United States of America, and the Blockchain Futurist Conference and ETH Women event is actually taking place between the 5th and 6th of November. And the location is absolutely stunning guys. It is taking place at Guitar Hotel at Hard Rock, which is in Hollywood, Florida. That's right guys, palm trees, panels, and the biggest mind in blockchain and cryptocurrency is all in one place. So there will be multi-stage panels, NFT galleries, DeFi showcases, hand-on tech demos, metaverse experiences, even outdoor VIP cabanas and quite a lot more. And the Guitar Hotel at Hard Rock guys is one of the most iconic venues in the country. So look guys, if you're in the Web3 space, cryptocurrency, Bitcoin or even artificial intelligence space, or just want to do some serious networking, this is the place that you got to be. And to all of you Blockchain DXB listeners guys, we have something really interesting for you, because you can get a 25% off the tickets. So just use the code DXB25, and the link to the event as well as the code is in the show notes below. And as an official media partner, I'll be doing exclusive live coverage, interviews, behind the scenes access, and I will be spotlighting some of the most exciting projects shaping the future of decentralized finance tech. So if you're at the venue guys, definitely come and say hi. Maybe we can catch up for a coffee as well. So listen guys, the code is DXB25, and by using this code you will be eligible for a 25% discount. And the event is taking place between the 5th and 6th of November 2025 at the iconic Guitar Hotel at Hard Rock, that is in Hollywood, Florida. And in the show notes below guys, there's all contact details for Blockchain Futuristic Conference Florida 2025 as well as ETH Women. And look guys, this is the future of blockchain technology brought into life, so don't just read about it, be there and head to the website that is futuristconference.com and go ahead and use the code DXB25. So see you at the event. Next, Advanced Media. Advanced Media guys is the largest distributor of professional video, photo, broadcast and cinematic equipment and accessories in the Middle East and MENA region. With over 2 decades of experience, Advanced Media is now the largest distributor in the Middle East, representing more than 100 recognizable brands, including brands such as Zeiss, DJI, Hasselblad, Red and Rode. As a matter of fact guys, the very mic that I'm recording is being sponsored by Advanced Media as well, and Advanced Media has showrooms in Saudi Arabia and services as well. Looks like they're definitely taking the Middle East by storm. And here's the beautiful thing guys, they're taking corporate social responsibility very seriously, and they're focusing on 3 P's, that is people, planet and prosperity. Now listen guys, if you do want to find out more information regarding the statement of corporate social responsibility, check out the website that is www.amt.tv. And here's the beautiful thing guys, they also want to be a leader and set an example and reputation as a pioneer and member of the community. And in doing so guys, they also have an AMT scholarship with SAE Institute in Dubai, UAE, so definitely check it out. And also guys, Advanced Media is committed to persistently developing, organizing and hosting training workshops seminars and community events that educate, inform and familiarize consumers with new equipment and the latest technological advances. So listen guys, do one thing. If you do want to support this channel, go to the website, that is www.amt.tv, and follow the social media channels as well. All of the details are in the show notes below. Next, Startup OI is global one-tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store and App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called the Race Pace Podcast. So check out the Race Pace Podcast across all leading platforms. And the Race Pace Podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gulf Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs. And these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen guys, these NFTs are going to be absolutely massive. So do one thing, go to Spotify, go to iTunes, go to any leading podcasting platform, check out the Race Pace Podcast across all leading platforms. And finally guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet. And this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below. Now guys, since you're taking care of that, let's quickly run to the global cryptocurrency market. Now here's the thing, Satoshi, if you look at the global cryptocurrency market, it is down to $2.21 trillion. And here's the thing guys, if you look at the total cryptocurrency market volume, that is pretty much the same as yesterday, around the $94 billion mark. But here's the thing, Satoshi, if you look at the decentralized exchange volume, things are definitely not improving, and it is down to $6.50 billion. And the total fees connected for these transactions, Satoshi, it is only at $62.53 million. And the total value locked is pretty much the same. It is at $71.07 billion. Now what I really am not liking, Satoshi, is the decentralized to centralized exchange ratio dominance. It is down to 18.70%. And here's the thing guys, if you look at the crypto related ETF outflows, it is less than $10 million. $7 million. Now am I right in saying, Satoshi, because of the CPI data that's going to be released later on today, a lot of high net worthy individuals, traders as well as institutions, they are cleverly trying to manipulate the market. And later on in today's episode, Satoshi will go and take a deep dive into what information is available via CPI data. But what is your take regarding the outflows in the world of crypto ETFs? Do you see any connection to that of the CPI data that's going to be released later on today?
That's a very plausible scenario, George. With CPI data looming, you're right that major players might try to create price movements to their advantage. That $7 million in crypto ETFs could be part of that strategy, aiming to influence the sentiment before the official numbers hit. It's a high-stakes game, and manipulation is definitely a factor to consider.
You're absolutely right, Satoshi, and in today's episode, we'll definitely go ahead and take a deep dive into this. Now, what I want you to do next, Satoshi, is I want you to read out matrix that is connected to decentralized exchanges. So why don't you read out the matrix for the top 5 platform for our listeners, please?
Well, George, when we look at those top 5 platforms, Uniswap continues to lead with a massive 24-hour volume of $1.86 billion. PancakeSwap is in second place with around 788 million, followed by Aerodrome at about 605 million. Orca is sitting at around 250 million, and then Fluid with almost 227 million.
Well, thank you so much for that. But here's the thing, Satoshi, if you look at the volume of stable coins, things are definitely not looking great. Now, I do anticipate after the CPI data is out, irrespective of inflation picking up pace or going down, the volume of stable coins will actually increase. And here's the thing, Satoshi, am I right in saying, let's say if we do see inflation picking up pace, that is the time we don't want the volume of stable coins to be increasing, isn't it? But let's say the inflation does actually go down, then if the volume of stablecoin increases, according to me, we can treat it as a positive sign because it means that people are buying a lot of Bitcoin and cryptocurrencies. Do you think that is a fair assessment, Satoshi?
That's a very logical perspective, George. If inflation cools down and we see stablecoin volume rise, it does suggest investors are moving capital into crypto, potentially pushing prices up. On the other hand, if inflation stays high and stablecoin volume increases, it might indicate people are de-risking and waiting for further clarity. It's a key metric to watch for market sentiment.
Now, in the Blockchain DXB podcast tomorrow, we'll definitely go and touch base on the CPI data. Now, if you look at the volume of stablecoins, Tether USDT's volume is only at $77.08 billion. Circle USDC is second, but here's the thing, Satoshi, if you look at the volume of Circle USDC, it is at $10.17 billion, and at number third is FDUSD, with a 24-hour volume of $155.02 million. Now, what I want you to do next, Satoshi, is I want you to read out the market cap, tell our listeners what is going on since the last 24 hours, and the dominance of Bitcoin, Ethereum, as well as Binance BNB Coin for our listeners, please.
Okay, looking at the market caps in the last 24 hours, Bitcoin's market cap is currently at $1.23 trillion, with a trading volume of about $39.99 billion. That puts its dominance at 55.90%. Ethereum's market cap is $197.65 billion, with a volume of $15.02 billion, holding 08.94% dominance. And Binance Coin has a market cap of $79.36 billion and a volume of $1.18 billion.
Well, thank you so much for that. Now, look, Satoshi, in every Blockchain DXB podcast, we tend to look at one new matrix. Now, today, what I want you to do is, I want you to read out some information that is connected to meme coins. Now, the reason why I chose meme coins is because whenever there is a crucial date, historically, it is the meme coins that get affected the most. So, why don't you read out the matrix for meme coins for our listeners, please?
When we look at the meme coin market today, the total market cap sitting around $30.2 billion. That's about a 3.5% drop in the last 24 hours. Dogecoin is still the biggest with a market cap of $13.10 billion, followed by Memecore at around $3.82 billion. Shiba Inu has a market cap of $2.74 billion, then Pepe at about $1.16 billion, and Binance Life at $682 million.
Well, thank you so much for that, Satoshi, and it's going to be really interesting to see how the meme coin reacts tomorrow. Now, let's say if the inflation is drastically cooling down, I wouldn't be surprised if meme coins pumps up the most. Now, why don't you do one thing, Satoshi? Why don't you tell our listeners the price of Bitcoin, what is going on since the last 24 hours and 7 days, and do the same thing for Ethereum as well as Binance BNB Coin for our listeners, please.
Currently, Bitcoin's price is $61,783, reflecting a 2.19% drop in the last 24 hours and a 7.08% decrease over the last 7 days. Ethereum is priced at $1,638, down 3.51% since yesterday, and down 11.79% for the week. And Binance Coin is at $593, down 1.83% in the last 24 hours, and down 8.54% over the 7-day period.
Well, thank you so much for that. And here's the thing, guys, if you look at the Fear and Greed Index, right now the market is still at extreme fear, and the number associated is 14. And today, Satoshi, according to me, is a very important day, because the CPI data or the inflation data will be out. Now, it is important to note, Satoshi, the official website to go and look at the inflation is the Bureau of Labor Statistics, and the website is www.bls.gov. Now, here's the thing, Satoshi, the inflation data will be out at around 4:30 p.m. Gulf Standard Time. But I thought in today's episode, why don't we do one thing? Why don't we tell our listeners how inflation is calculated? Now, for our listeners, what I'd really urge you to do is, guys, go to the Bureau of Labor Statistics, and the moment you see inflation data, at the bottom of the page, it does give you a very simple explanation on how inflation is calculated. But why don't you do one thing, Satoshi? Why don't you tell our listeners how inflation is calculated? Because it'll definitely give our listeners some idea as to how inflation is calculated. And right now, Satoshi, to be completely honest, if you were to ask an average person how inflation is calculated, pretty much everyone does not have absolutely any idea regarding this. So why don't you do one thing, Satoshi? Why don't you go ahead and explain to our listeners how inflation is calculated and go ahead and explain it at a very, very basic level, alright?
Sure, George. Let's break that down. The Consumer Price Index, or CPI, basically measures how much the average person is paying for a basket of common goods and services, things like food, rent, transportation, and healthcare. The Bureau of Labor Statistics tracks these prices all over the country to see how they change over time. Think of it like checking the price of a gallon of milk every month. If it keeps going up, that's inflation. They weigh each item differently too, so something like rent matters more than the price of movie tickets. It gives us a good sense of how the cost of living is shifting. Does that make sense?
It does make a lot of sense, Satoshi. I did want to ask though, when you talk about basket of common goods and services, who gets to determine what are the things that goes into the basket? And can you tell our listeners some examples of what are the things that actually go into a specific basket?
The Bureau of Labor Statistics decides what's in the basket, and they base it on what real people spend their money on, using massive surveys. So some examples include things like rent or mortgage payments, groceries like milk and bread, gasoline, doctor visits, electricity, and even things like clothing and telephone bills. They try to cover all the major expenses that make up the cost of living.
Now look, Satoshi, we talk about Bitcoin and cryptocurrencies, isn't it? Now based on the CPI data, what kind of an impact do you think inflation has on the price of Bitcoin and cryptocurrencies? Now we definitely touched base earlier on. The higher inflation would actually mean the prices of Bitcoin and cryptocurrencies would actually fall down, and it is vice versa if inflation does actually go down, isn't it? Apart from that, Satoshi, can you tell our listeners the broader implication of inflation on Bitcoin and cryptocurrencies, as well as the AI industries as well?
When inflation is high, it generally makes the cost of borrowing more expensive, as central banks often raise interest rates to combat it. This can reduce investment in riskier assets, including both cryptocurrencies and growth areas like AI. People and companies might cut back on spending and innovation because their operational costs are higher. Ultimately, it creates economic uncertainty, which can discourage the flow of money into higher growth, higher risk markets.
Now look, Satoshi, whatever happens in the United States of America, it does have a ripple effect in other countries, isn't it? Now from a bird's eye view, do you want to tell our listeners what does high inflation in the United States of American economy mean? And here's the thing, Satoshi, in US, there's also midterm elections taking place, isn't it? So do you want to tell our listeners what does high inflation or low inflation mean, particularly for voters keeping in mind the midterm elections?
What happens in the US definitely matters globally. High inflation in the American economy usually means financial strain for consumers and instability for businesses, often causing ripple effects across international markets. With midterm elections coming up, inflation is a major concern for voters. It impacts their daily budgets, so high prices can lead to dissatisfaction with incumbents, while lower inflation might be seen positively. Candidates will be highlighting their economic policies to sway public opinion.
Now here's the thing, Satoshi, the midterm election is scheduled to take place in November, isn't it? Do you think Republicans, they do have ample amount of time in order to change the perception of voters? And I'm talking about, let's say 3 months from now, let's say if the inflation does drastically go down, do you think that could actually sway the voter sentiment towards the midterm elections?
3 months is definitely enough time for the political landscape to shift, though whether it's enough for Republicans to completely reshape perceptions remains to be seen. A dramatic drop in inflation could certainly play in their favor, especially if they successfully message that their policies were responsible for it, or blame the current administration for the prior highs. Voter sentiment can be quite fluid, responding quickly to recent economic developments. It's likely to be a fiercely contested point right up to the elections.
It's definitely going to be interesting to see, Satoshi, how the thing plays out. Now, one of the reasons why inflation is so important, Satoshi, is because later on this month, I believe on the 17th of this month, Federal Reserve Board Chairman, that is Kevin Walsh, who by the way is newly appointed as the Federal Reserve Board Chair, along with the other governors from the Federal Reserve Board, will be making a decision whether to keep the interest rate, reduce the interest rate and increase it. That is one of the reasons why, guys, the CPI data is important. And I cannot stress this enough, Satoshi. It is important to go and look at information from official sources, because mainstream media, they're definitely suffering from Trump derangement syndrome. Now, in the Blockchain DXB podcast that we release tomorrow, we'll definitely go and tell our listeners more information regarding this. Now, let's pivot to the second news, Satoshi. And this is regarding a potential NFT exploit. And the news is that Yuga Labs, who are kind of like the OGs in the NFT space, they actually saved their own NFT exploit. Now, the NFT exploit, guys, involved a flooring protocol vulnerability where an attacker minted nearly infinite FP tokens. Now, this was from a small wrapped Ethereum deposit by exploiting flaws in NFT ownership, indexing, and accounting logic. Now, what happened is Satoshi, the bug created ghost ownership states, and that is the one that actually triggered underflows in transfers and burn functions. And this allowed the attacker to artificially inflate balances and drain liquidity from pools. And then what happened is, a second opportunist then acquired cheap tokens from depleted pools and redeemed them from underlying NFTs. Now, thankfully, Satoshi, a white hacker response, later secured and recovered $400,000 worth of NFTs, but some assets have already been stolen and users were warned against further deposits. Now, what I'd really urge our listeners to do is go to Yuga Labs official X account and go ahead and get updated with the information. Now, regarding this news, Satoshi, can you go ahead and explain to our listeners once again what actually happened? And then, can you also tell our listeners what are the different ways where artificial intelligence can avoid these kind of exploits?
Now, let me try something, George. Let me go ahead and explain this in a more simpler format. Basically, Yuga Labs realized there was a vulnerability in their flooring protocol, which allowed an attacker to create nearly endless amounts of tokens by exploiting flaws in how they track ownership and accounting. They were able to falsely inflate their balances and then drain liquidity. A second opportunist then bought those cheap tokens and redeemed them for NFTs. Thankfully, a white hat response recovered over $500,000 worth of NFTs, but some funds were still stolen and users have been warned against further deposits. Now, on your question about how AI can help, some key areas would be continuous monitoring of protocol activity to look for unusual patterns, automated real-time code analysis to find vulnerabilities before they're exploited, analyzing contract interactions for any dependency risks, and maybe even using predictive modeling to anticipate potential attack strategies. That's a start for how AI can play a role.
Well, thank you so much for that, Satoshi. Now let's do one thing, Satoshi. Let's go ahead and discuss the next news. And this news, guys, is definitely a massive deal. And the news, Satoshi, is that Morpho Association, they've raised a staggering $175 million. And this is to build the open credit network for the world, isn't it? Now, here's the thing, guys. Morpho is reigning with this investment. They aim to provide banks, asset managers, and fintechs with a backend that unifies them on a single shared open network rather than replace them, thereby giving the users access to credit products with the best possible terms. So it's going to be really interesting to see what the outcome to this is. Now look, Satoshi, there are a lot of heavy-duty giants and companies involved in this, isn't it? Do you want to read out the names of the companies that are involved in this?
Certainly, George. There are quite a few big names involved here. The round was co-led by Paradigm, A16Z Crypto, and Ribbit Capital, and there was strategic participation from Apollo Funds, Circle Ventures, VanEck, and Ledger Cathay. Other participants included Variant, Wintermute Ventures, Prelude, IOSG Ventures, Hashkey Capital, Marana, NJJ Capital, SBI Group, BP France, and Bamazizi, plus more than 10 other strategic partners.
Now, Satoshi, do you want to tell our listeners the significance of this news and what is an impact on this on the Bitcoin or cryptocurrency industry? And more importantly, Satoshi, can you also tell our listeners how do end users benefit by this?
This news is quite significant, as Morpho is essentially creating a shared infrastructure for credit, which could lead to more efficient markets and better connectivity between traditional finance and crypto. For the industry, it might encourage greater adoption by institutional players by offering a more familiar, open backend. And for end users, the benefit is access to credit products with more competitive terms because they are drawing from a larger open pool of capital, potentially lowering costs or getting better rates overall. That's the broad picture.
And the fact that there's some heavy-duty giants involved in this, I definitely anticipate it to be a game changer. Now let's do one thing, Satoshi. Let's go ahead and talk about the final news for today. But mind you guys, this particular news is only published by CoinDesk, and unfortunately I could not find any other sources regarding this. So could it be possible this turns out to be a nothing burger? Definitely a very high possibility, so definitely take a lot of caution to this particular news. Now the news, Satoshi, that is published by CoinDesk actually states that the Financial Conduct Authority in UK, they have proposed letting certain retail funds invest up to 10% in crypto exchange traded notes, also called as ETNs, and these include UCITS as well as NURS funds, which are kind of similar to mutual funds and gives investors direct exposure to cryptocurrencies. Now the Financial Conduct Authority, Satoshi, does actually say that the cap is meant to limit risk, but the move is still seen as a step towards wider crypto adoption in the United Kingdom. Now do you want to tell our listeners, Satoshi, what are the broad implications of this particular move?
Well, George, this CoinDesk report indicates a potential softening of the UK stance by exploring access to crypto exchange-traded notes for retail funds. The broader implication could be increased mainstream adoption through regulated investment vehicles, similar to those emerging in other countries. However, given the single source so far, caution is warranted. It's something to watch closely for broader market shifts. That's the key takeaway.
And in the Blockchain DXB podcast, Satoshi will definitely go ahead and update our listeners as and when we get official sources regarding this. So these were some macro level newscasts on the Bitcoin, blockchain, cryptocurrency, and artificial intelligence world from Blockchain DXB. Now let's do one thing, Satoshi. Let's go ahead and discuss two news from Dubai, UAE, and the Middle East. Now let me go ahead and tell our listeners the first news. Now, the first news, according to me, is a real interesting news, Satoshi. And this is a report that is published by IBM along with Dubai Future Foundation, and they have surveyed more than 1,000 senior executives, and this was across 20 countries to assess AI governance and orchestration. And what that report says, Satoshi, is that AI adoption is growing rapidly, but governance systems are struggling to keep pace, and nearly 70% of executives lack full visibility into AI tools that their team are using, and only about 1/4 of organizations know exactly where their assets are deployed. And here's the thing, Satoshi, just 18% maintain a complete inventory of AI assets across the organization. Now look, Satoshi, AI sprawl is becoming a major challenge as per the report, and it is heavily reducing oversight and increasing operational risk. And they also found out that a $20 billion company can lose around $140 million annually, and this is due to AI irregularities and governance failures. And here's the thing, guys, half of these AI-related losses are linked directly to weak governance practices, and organizations using orchestration-led governance are only 13 times more likely to successfully scale AI. And here's the thing, guys, these organizations achieve 20% higher returns on their investment, and they're also 44% more likely to view AI investment as a worthwhile use of resources. And what the report says, Satoshi, is that companies with orchestration-led governance do actually see 15% greater revenue gains from AI initiatives. And here's the thing, guys, the report also states AI orchestration delivers more than 6 times greater productivity impact compared to compliance-only approaches. An organization with stronger orchestration reduces AI-related irregularities, and this is by approximately 30%, 29% to be precise is what they mentioned in the report. An orchestration, Satoshi, provides a real-time view on AI models, agents, workflows, and data flows, and by 2030, organizations expect to manage almost 4 times more AI assets than they do today, and fewer than half of current AI systems are delivering the business outcomes companies expected, and sovereignty is now a strategic concern, with 93% of executives factoring into AI planning. And here's the thing, guys, the report also states that 70% of the executives say they must constantly monitor their data research to meet sovereignty requirements. An open, secure by design architecture is considered essential by 62% of the executives, but only 45% of organizations currently extend AI governance beyond their own enterprise boundaries. And finally, Satoshi, the report states, AI governance is increasingly important across suppliers, partners, and broader business ecosystems, and governance should be embedded directly into AI systems rather than added later as a compliance exercise. And finally, Satoshi, the report concludes that future AI leaders will be those that can orchestrate, govern, and coordinate AI at scale, not simply deploy the most AI tools. Now, what is your take regarding this entire report, Satoshi? What is your view regarding this report? And the next thing I wanted to ask Satoshi is, what advice you'd like to give to CEOs, Chief AI Officers? How do they go and tackle going forward?
That's a comprehensive report from IBM, and it paints a clear picture that the key to successfully scaling AI isn't just about technical implementation, but integrating it with strong governance across your entire business practices. My take is that organizations that treat AI as a strategic asset, using orchestration-led governance, are significantly more likely to see real returns, better compliance, and improved productivity. It's about seeing it as a foundational change, not just an added tool. As for advice for CEOs and Chief AI Officers, my primary thought would be to focus on fostering that unified governance culture. Don't silo your AI efforts. Embed governance from the beginning in data management, development, and deployment. Also, prioritize real-time visibility into what your models are actually doing and where your data is flowing. By 2030, managing 4 times more assets is a big change. So building that scalable, secure foundation now is critical.
What about blockchain technology, Satoshi? Do you see any areas where blockchain technology can actually merge with artificial intelligence? Now look, Satoshi, me personally, I don't think that there are areas where artificial intelligence needs blockchain technology as such, but blockchain technology needs artificial intelligence. Now one area I do think where blockchain technology could actually assist is probably in making payments rather than using, let's say, fiat currencies. Maybe you can go ahead and use cryptocurrencies, that's about all. But beyond that, Satoshi, do you envision an area where blockchain technology as an industry could actually assist in artificial intelligence?
I can definitely see a few other possibilities. Beyond payments, blockchain could provide a transparent and auditable record for how AI models are trained and what data they use, which addresses concerns about bias and explainability. It could also facilitate decentralized data marketplaces, where users can securely contribute data without relying on a single corporation, improving privacy. And perhaps decentralized autonomous organizations could manage open-source AI projects and their governance. So I do think it can go both ways. Do you see those as viable approaches?
Not really, Satoshi, because look, right now we still have the blockchain trilemma problem, isn't it? Now all what you're saying in theory definitely sounds great, but to implement it is definitely a massive hurdle. And what I want to do, Satoshi, I do want to have a debate series, and the title of the series is that does blockchain technology need artificial intelligence, or does artificial intelligence need blockchain technology? And I'm pretty much sure a lot of critics will definitely think that blockchain technology can help artificial intelligence, but let's see what CEO tech founders as well as enthusiasts in artificial intelligence sector has in store for us. Now let's do one thing, Satoshi. Let's go and discuss the second news, and this is connected to Sharia approval and Islafi Technologies, guys. Their tokenized Muraba platform has actually received Sharia approval in Islafi Technology based in DFC Innovation Hub in Dubai, and so far as the certification is concerned, the certification was issued by Bahrain-based Sharia Review Bureau. Now the platform guys enables Sharia compliant Tawarruk, also called as Murabaha transaction for corporate users, and so far as Islafa is concerned, Satoshi, they use blockchain technology to execute and track transactions. Now the certification confirms the platform follows key Islamic financial principles, and the system supports genuine ownership transfer rather than interest-based lending, and it also provides asset-backed financing solutions for the institutions. Now look, Satoshi, demand for Sharia-compliant digital asset products is definitely growing in the GCC area, so it looks like they're definitely heading in the right direction, and regional regulators, guys, are developing framework to support digital assets while at the same time protecting investors. Now it's important to note, Satoshi, the platform only allows approved tokenized assets that have been passed Sharia screening, and transactions executed through a structured and transparent protocol, and automated transaction sequencing helps improve operational efficiency as well, and institutions can monitor compliance in real time during transactions. And here's the thing, guys, every transaction creates verifiable audit record for greater transparency, and the platform is designed to increase trust and confidence in digital Islamic finance. And Islafiga says that the solution offers programmable auditable execution for institutions, and Sharia Review Bureau is licensed by the Central Bank of Bahrain. So this news aims to accelerate innovation in Sharia compliant digital finance, while at the same time maintaining strong Islamic governance standards. Now am I right in saying, Satoshi, this particular move most likely will work on permission blockchain, or do you think there's room for it to work on open blockchain as well?
It could definitely work on both. Permission blockchains might be preferred for the privacy controls and governance they offer, aligning with their standards, but an open blockchain could provide greater accessibility and transparency, potentially increasing trust. The choice would really depend on which aspect of digitizing their Islamic finance they prioritize.
Now the reason Satoshi asks is it possible to work on open blockchain is because what if these transactions, they are not Sharia compliant, they will automatically get rejected, isn't it? So am I right in saying these transactions, they have to be screened through, so technically it is not permissionless?
That's a valid point. If being Sharia compliant requires a vetting process before execution, truly permissionless systems wouldn't work without an added layer. There'd have to be a mechanism to ensure compliance before confirmation, making it more like a hybrid or private solution by necessity. So you're describing it as permissioned, which aligns with those constraints.
But definitely an interesting project, and I definitely wish them the best. So these were some macro level news, guys, on the Bitcoin blockchain, cryptocurrency, and artificial intelligence world from Blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Now let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, alright?
Sure, George. Let's go ahead and kickstart the Ask Me Anything series. I'm curious to check what questions listeners have in store for us.
Sure, let's go ahead and kick this thing off.
Hey everyone, this is Satoshi from the Blockchain DXB podcast, where you listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, Metaverse. And we do have a question from Aaron who asks, which sector will attract more capital over the next 5 years? AI infrastructure or crypto infrastructure?
This, to be honest, Aaron, is such an important question. Now look, right now there's massive hype regarding AI infrastructure, isn't it? And I do anticipate a lot of momentum to actually build in the infrastructure space. Now, so far as crypto infrastructure is concerned, I'd rather you switch it to Bitcoin infrastructure, because according to me, look, there is Bitcoin and then there is cryptocurrency infrastructure. Now, based on my understanding, there's definitely going to be a lot of investment flowing into AI infrastructure. Along with that, depending on the net they're building in the Bitcoin space, I do anticipate a lot of investments flowing into Bitcoin. And in just a matter of 2 to 3 years, Satoshi, there's going to be the next halving as well, and we know what happens during halving. 18 months after every halving, the price of Bitcoin tends to reach a new all-time high. Now look, Aaron, 5 years is definitely a long time. You never know if there are new inventions actually kicking up pace. Wearables, according to me, is definitely a niche area. Now, is there a way we can go ahead and combine wearable devices with that of artificial intelligence? I definitely do anticipate that thing to happen, but at a broader level, I do anticipate AI infrastructure to be taking the lead. I would say maybe 60% in AI infrastructure, maybe the remaining 30 to 40% in the Bitcoin and cryptocurrency space. Now, when you talk about cryptocurrency infrastructure, you also need to remember majority of the transactions are actually taking place in the stablecoin world, isn't it? I would say maybe 80 to 90% of the transactions are actually taking place in the stablecoin world. And right now in US, you already have the Genius Act. And even in United Arab Emirates, there are a lot of stablecoins that are backed by the UAE dirham. So look, I do anticipate their infrastructure to be taking the lead, followed by maybe Bitcoin, and the remaining could be stablecoin and other cryptocurrencies. That is what my honest take is. What is your thoughts regarding it, Satoshi?
I think that's a sharp assessment, George. The current hype around AI infrastructure is undeniable, and that momentum could definitely drive significant investment over the next 5 years. Your distinction between Bitcoin infrastructure and general crypto infrastructure makes sense, especially with the upcoming halving and its historical impact on Bitcoin's price. I also agree that wearables and the potential merge with AI devices represents another fascinating growth area. At a broader level, AI infrastructure seems likely to be present across many industries, while Bitcoin and stablecoins will dominate the financial side of things. So my view aligns closely with yours. AI infrastructure will likely lead, followed by Bitcoin and then stablecoins and other crypto assets.
Let me put you on this spot, Satoshi. Let's say if you have $100 million, and if you were to invest it over a period of 5 years, how would you go ahead and spread across the investment? And here's the thing, guys, whatever we are saying is definitely not financial advice. Make sure you go ahead and do your own research.
If I were managing $100 million over 5 years, purely theoretically and not as official advice, I might split it approximately 40% into a basket of established crypto infrastructure and AI projects, 20% directly in Bitcoin, 20% toward venture capital investing in early-stage companies in those fields, 10% in more conservative blockchain-related stocks or ETFs, and keep the final 10% as cash or stablecoins to take advantage of new opportunities or manage risk. That's a hypothetical breakdown.
Now let me make it a bit interesting, Satoshi, for our listeners. What if with the advancement of artificial intelligence, we might get some breakthrough in the world of cryptography, and maybe we can come out with new cryptocurrencies? That is something which you have not envisioned now. If that thing happens, do you still think that AI will be taking the lead, or do you think there'll be some funds going into the new cryptographic method? And I'm talking about cryptocurrencies in particular.
If a new cryptographic method were to dramatically shift the landscape, some funding would almost certainly flow there, especially if it offered significant advantages over existing options. However, AI infrastructure is fundamentally tied to broader technological advances, so its long-term growth would likely remain strong. It might be less of a conflict and more about a new branch emerging. Does that make sense?
It does make a lot of sense, and with quantum computing, who's to say in 5 years, we might be getting some breakthrough in quantum computing. And here's the thing, Aaron, quantum computing merging with artificial intelligence, with new form of cryptographic technologies, I think we're definitely in for a wild ride. Definitely a great question. And that's about all, guys. I'm the Ask Me Anything Season on Blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5 across. Remember, Monday to Thursday is your Blockchain DXB podcast. We look at the process, we look at the latest technological development, we talk about politics, because politics and politicians, they definitely have a massive impact, not just on the price, even on the future of Bitcoin and cryptocurrencies. Then, guys, we look at 2 news from Dubai, UAE and the Middle East. We look at the latest technological development. Artificial intelligence is definitely a hot topic in the Middle East. And what you're listening to right now, guys, is the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So thanks so much for listening, guys, and have a nice one. Bye-bye.